Now to the health of the banking system. Wall Street is finally starting to stabilize with stocks up again today, building off yesterday's rally. Regional banks are surging today, led by First Republic. Shares of the struggling bank are up about 40% after losing nearly half of its value during trading yesterday. Well, remarks from Treasury Secretary Janet Yellen really helped those bank stocks today after she defended the decisive and forceful actions by regulators to prevent more banks from failing and pledging more help if needed in the future.
Treasury is committed to ensuring the ongoing health and competitiveness of our vibrant community and regional banking institutions. A safe and sound banking system is integral to the health of the American economy, and we are squarely focused on doing our job. And you should rest assured that we will remain vigilant.
So, how safe is our money? That's where we bring in our business correspondent, Alexis Christoforous, to try and break it all down. So, what stuck out to you from Yellen's remarks?
Well, I think, Kira, her remarks are the clearest signal yet that the government is standing by, ready to intervene and backstop more deposits if another bank were to fail. I also found it to be very reassuring that she said things appear to be stabilizing now. We're seeing deposit withdrawals from regional banks slowing, in some cases even reversing since the federal government staged its intervention last week. Of course, that's when federal regulators used their emergency powers to guarantee uninsured deposits that now collapsed Silicon Valley Bank and Signature Bank. And they also set up at that time a new Federal Reserve lending program to allow banks to meet withdrawal requests. And of course, all of this, Kira, is in an effort to try and shore up confidence in the banking system.
So the Fed is meeting tomorrow over this highly anticipated move on interest rates. So how do you see that playing out?
We have a very divided Wall Street on whether or not the Fed's going to raise rates. So they've been in this fight against high inflation now for over a year, continually raising interest rates. It's those higher rates that actually got a lot of the banks in trouble. So we'll have to see if the Fed thinks it's going to roll the dice here and raise rates again, possibly squeezing the banking system even more, or will it just lay low and let things settle in the banking system. You can see there we've had 8 interest rate increases in just the past year as the Fed tries to wrap its arms around inflation, which is still running hot at 6%.
So in the wake of this crisis, we're learning that the FDIC actually could expand its coverage and insure Americans beyond that $250,000 threshold that you've been talking about with us daily. Is that what you're hearing?
Well, I think it's a long way from becoming a reality, but it's certainly something the Treasury Department will consider, and it would go a long way in boosting confidence in our banking system. Janet Yellen, Treasury Secretary Yellen, was asked about this today when she addressed the Banking Association, and she said there will be a time for us to look at those rules. Right now, though, we want to stabilize the banking system. Fed regulators, by the way, would probably need emergency authority to ensure deposits above $250,000 without the consent of Congress. And as we know, we have a very divided Congress. It would be hard to believe something like this would actually pass. Republicans are already pushing back on this idea.
And also, Credit Suisse, that we've been talking a lot about, says it will continue to hand out bonuses and pay raises to those eligible. Okay, what do they mean, those eligible?
Right, that is a big question mark. Remember, this bank just got bailed out by its larger rival for more than $3 billion. I think the idea that the bank is going to pay out bonuses is not going to sit well with lots of folks. Whether or not those are top-tier people at Credit Suisse or across the company, we just don't know. Legislators are also now asking for the former CEO of Silicon Valley Bank to give back some of the money he made off of a stock sale just 2 weeks before his bank collapsed. Greg Becker sold $3.6 million worth of his company's stock. So, and those people at SVB, by the way, were also given bonuses just a couple of days before the bank collapsed. So we're going to have to see if some of those people need to give some of that money back, Kira.
Only seems fair. Alexis, thank you so much.
Yep.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.